Okay, hello, welcome everybody. Really excited to bring you this event today, so thanks for joining me. It's with my good friend David B Horne on a topic that David's really championing, and one of the biggest issues of our time, really, particularly in the funding scene, and that's the lack of representation, the lack of deals being done for female and ethnic minorities. It's a massive issue. And it's something I wanted to bring you because I've been recently looking at some interviews with VCs and investors, and they were asked questions around kind of what needs to be done. What can investors do to make the playing field more even? And the responses were really lackluster. They were really not what I was hoping to hear from the VCs and the investors. It was more around there's not enough females pitching to us, and therefore it can't be equal. But 1% of female investors, female founders, are receiving investment, yet 30% of businesses are owned by females. So there's clearly something going wrong. It's clearly not a case that there's not enough female entrepreneurs. We know that. You all know this. So I wanted to bring David here to explore the subject in more detail. But before we hear from David, a quick introduction from me for those of you who are new to these events. So for those of you who don't know, my name's James Church. I'm the author of the best-selling book, Investable Entrepreneur, and I'm also the co-founder and COO at Robot Mascot. And at Robot Mascot, we create investment materials that convince investors. By that, we mean your pitch, your projections, your business plans, all the assets you need to go and convince investors that your business is the one to back. And when we do that, our clients are 30 times more likely to raise the investment that they need. And that's led us to being recognized as the UK's leading pitch agency. And essentially, all we want to do is see great ideas and innovations flourish. We don't want them to fail because of poor communication with investors. That's at the heart of what we do. So a massive thank you to those of you who bought a ticket for good for today's event. Through those tickets, we're able to help entrepreneurs, female entrepreneurs in Kenya, like Abuya here, to create a business that's going to support themselves, their family, and their communities, and pull them out of poverty through the power of entrepreneurship. And with today's Tickets for Good, we've been able to fund 21 days of business training and support to female entrepreneurs, 60 days of early childhood education for their children, the next generation of entrepreneurs, and 3 years of access to life-saving clean water as well in the most impoverished parts of Africa. So a massive thank you to everyone who bought a ticket for good for today's session. So a couple more things from me before I hand over to David. If you haven't already, take our Pitch Ready scorecard. It's completely free. It will benchmark your ability to raise investment currently, and you'll be able to see it's a free 12-page report with hints and tips on how you can improve your current positioning so that you can raise investment effectively from investors. And if you're interested, if you want to get the recording from this event and watch back to what David shares with us, you can connect with me on LinkedIn. You can join my Facebook group, Investable Entrepreneur, or we will be posting this video on the Robot Mascot YouTube channel as well. So without further ado, I want to introduce you to David B Horne. Like I say, he's a good friend of mine. He's got over 35 years of experience in raising debt and equity funding. He's raised more than 150 million, and he's bought and sold more than 20 companies. So he knows what it takes to raise money. Like I say, he's a good friend. He's also the author of the amazing book, Add Then Multiply. And we do have a little battle going on. We constantly text each other about who's winning in the Amazon charts. And you'll often find us neck and neck in the Amazon charts. David currently one ahead of me. So go out and buy my book so I can go and beat David. I'm sure he'll say the same. But we have a friendly rivalry on Amazon. So through David's organization Funding Focus, he's leading the fight for fairer funding. So I want to hand over to David to take you through what he's doing and why he's leading the charge for fairer funding for everyone and equal funding for all. So David, over to you.
Thank you very much, James, and good afternoon, everybody. It's really, really great to be here. Lots of you are here. A few of you have your cameras on. I would love it if some more of you could turn your cameras on. I do a lot of these kind of talks, and it's always nice to see some human faces on the other side. So thank you very much to those of you who have turned your cameras on. And for those of you who haven't, hopefully you won't be so shy. So my background, I trained as a chartered accountant with PwC. I'm originally from Canada, hence the funny accent. And I moved to Europe in 1987 to Zurich, Switzerland, where I worked with PwC. I then left them and spent the next 10, 12 years of my career in large corporates with AT&T and the BBC. And then between 2000 and 2010, I started working with smaller, more entrepreneurial businesses. And I ended up over that 10-year period in working as the CFO of 3 companies that were very different companies, but they all had one thing in common. So one of them was a PR agency group. One of them was a digital media and publishing group. And one of them was a online auctioneer of used industrial equipment. So totally different businesses. But what they all had in common was that they raised money and bought other companies. And so over that 10-year period, I became a bit of an expert in what is involved in the process of raising capital, both debt and equity funding, and what is involved in the process of M&A, whether it's buying or selling companies, because we would often buy a group and then there'd be bits in it that we didn't want, so we would sell that off. And the last 2 of those companies were listed on AIM, London's alternative investment market, and that's where I did most of the large scale fundraising. And since 2010, I have been doing that exclusively, working with founders of businesses. So I've set up my own consultancy company called Add Then Multiply, and we work exclusively with founders looking to scale up and grow. And just over 2 years ago, I was speaking at an event in Reading. It was an event for small business owners, and I was talking about fundraising. And after my talk, a woman came up and asked me why so little venture capital funding went to female founders. And I have to admit, I'm a little ashamed to say that at that time, I had no idea this was even an issue. But I soon discovered not just that it was an issue, but just the gross scale of it and the gross injustice of the issue. And it all unfolded in a way that's led me down a path that 2 years ago I never believed, well, I never imagined I would be on, but now I'm down this path 2 years, and I have publicly committed to spending the rest of my life on addressing this issue. And I'll get into that in a little more detail. So not long after that talk that I gave, I was in a meeting with the chief executive of the British Business Bank. And she and I had met at a function at the Institute of Directors and had set this up as a follow-up meeting. And so I went to her office and we had a very pleasant conversation about a wide range of things. And towards the end of our conversation, I asked her if she knew anything about this issue of venture capital and female founders. And she sort of smiled and reached down to the bottom drawer of her desk and pulled out this report, which is called UK VC and Female Founders. You can get it on the British Business Bank website. Oh, nice to see some more faces. Hello. The rest of you, please don't be shy. Turn your cameras on. It's lovely to see people. So she gave me this report, and I took it away and started to study it. And
which, after having that huge run up at the end of last year into January.
She gave me this report, which I went away and studied, and I was absolutely shocked at what I found. So this was a report that was commissioned by the UK government to the British Business Bank. It was conducted with professional researchers, and they looked at every venture capital deal in the UK in 2017 and split results by all female teams, mixed gender teams, and all male teams. And all female teams submitted 5% of the pitch decks and got less than 1% of the total funding. Mixed gender teams submitted 20% of the pitch decks and got 10% of the funding. And all male teams submitted 75% of the pitch decks and got more than 89% of the funding. And I was just astonished when I discovered this and started to read around it a bit more. And then I was having coffee with a friend of mine who works at the London Stock Exchange, and because I used to be the CFO of a couple of AIM-listed businesses, I still had some contacts there. And so I was having a coffee with Claire and talking to her about this, because I know that the stock exchange has done a huge amount of work over the last 15, 20 years to promote females onto the boards of FTSE 100, FTSE 250 companies. And I was talking to her about this report, and she was obviously aware of it. And I said, well, what can we do? And she said, well, the industry's put on a few events, and there have been other things, but nothing's really come from it. And I went away and I thought, when I say the industry, I mean the venture capital industry. And I just thought, this is coming at it from the wrong angle. No, what's happening from the perspective of the entrepreneurs? What's happening from the perspective of the people who are actually starting the companies and going out there and trying to raise money? And it just hit me one day that I wanted to put on an event and see where this would go. And so I went back to my friend Claire at the stock exchange and convinced her to let us have the theatre. There's a lovely theatre at the London Stock Exchange, seats just over 100 people, and convinced her to let us have the theatre. And we put on an event on the 25th of November, 2019. We filled the theatre, and it was a great afternoon session. We had speakers who had raised angel funding, venture capital, private equity, and done an IPO, all female entrepreneurs who had done that. And then we had a panel discussion with a selection of female investors to get their perspective on what was going on. And coming out of that day, in addition to the size and scale of this issue, two other things became very clear to me. The first one was that this is not just a UK problem. This is a global issue. And in our social media posts running up to that event, we had feedback and comments, not just likes, but actually people commenting from 10 countries around the world. We had Australia, Belgium, Canada, China, France, Germany, Ireland, Switzerland, South Africa, and the USA, in addition to the UK. So all of a sudden I'm thinking, okay, this is a bigger issue. And the other thing that came up that was really interesting was this isn't an issue of female versus male, because there were a number of male entrepreneurs from different backgrounds. There were a couple of Asian men, there were a couple of Black men in the audience who said, we're facing exactly the same issue. And so I started to think, okay, this is getting even bigger. And so that event went off very well, and we had great feedback from it. And so going into 2020, I had big plans on what we could do and where we could take things. And we were looking at running a series of events around the UK. And then a little thing called COVID came along and put it through a bit of a spanner into the works on that. And we kind of held back for a while, because in my other business, I got very actively involved working with clients on helping them to secure the CBILS loans facilities and other funding arrangements that were available. So I kind of put Funding Focus, this event, on the back burner for a little while. But last summer I was talking with my team and we said, let's do something again. And we decided to put on another event that we would hold on the anniversary date of the first event. So it was an online event that we held on the 25th of November, 2020. And we went out and just put the word out through our social media and our connections and contacts. And we had over 150 people show up on the day, from as far west as San Francisco, as far east as Cebu in the Philippines, and as far south as Cape Town in South Africa. So we're starting to tap into a global audience. And we ran another 4-hour event, and we had 13 different speakers. We had a couple of fund managers. One was a VC investor, a woman in Singapore who has launched a fund in Singapore for investing in female-founded businesses in Southeast Asia. The other was a male investor whose portfolio is currently, and they didn't do this by design, but their portfolio is 50-50 gender balanced at the moment. And so I wanted to get his perspective on things. And then we had 10 or 11 entrepreneurs coming in and telling their tale. Well, we had 10 entrepreneurs coming in and telling their tale. And then for our closing discussion, we had a woman who is a Singaporean Chinese immigrant to the United States. So she's female, she's of a different race and an immigrant into a country, so really facing challenges, and has raised money successfully with an investment firm that actually backs immigrants. And so we had this female founder and the investor who backed her having a dialogue. And that went really well. And coming out of that, we had more feedback from people saying they'd like to look at where we can take this, what more can we do? And so we did a survey and we decided to run quarterly events. And so in 2021, we've already run one event in March. We've got another event coming up on the 16th of June. I'll put the link to the chat. Tickets to that are free. It would be wonderful to see any of you on that day. And the whole idea behind our events is we are bringing in founders who are either female or underrepresented from any gender who have successfully raised money. So the idea is that here's people, yes, there's no question it's an uneven playing field. Here's people who've successfully traversed that playing field. How can we learn from them? How can we take inspiration from them? How can we see what they've done and see how we can apply that in our business? And from the online event that we ran and the one that we've run in Q1, we've now tapped into a global audience of over 500 entrepreneurs in 25 countries on 5 continents. The only 2 continents we've not hit are Australia because of the time zone and Antarctica, but I don't think there are many entrepreneurs in Antarctica. And in fact, for our June event, because of that time zone issue, we've actually decided to run 2 events on the same day. So we're going to run one event at 9 o'clock in the morning to make it accessible at a friendly time for people in Southeast Asia and Australia and New Zealand. And then we're going to run another event at 4 o'clock in the afternoon to make it accessible for people on the West Coast of North America. And of course, both of those will fit for people who are in the EMEA time zone. So our whole goal here is to drive this forward and to give a sense of, of opportunity and give a sense of this is how it's done, give a sense of inspiration, give hope to people. Because from all of the people I've spoken to, so many of them, you know, they've tried for years and been unsuccessful and don't know where to turn and don't know what to do. And so I've been leading this, this movement called Funding Focus and the Fight for Fairer Funding. And I am making it my mission for the rest of my life to do what I can to level the playing field. I have 2 young co-founders in the business with me who are equally committed. I don't know if I'm going to be able to achieve it in my lifetime, but it's good to know that I've got a couple of young co-founders who, when I'm no longer here, they can pick up and carry on. So this is a long-term commitment that we are very dedicated to. A couple of other things that are linked to that. In October of last year, I gave a TEDx talk called The Fight for Fairer Funding. Again, I'll put the link in the chat if anybody wants to see that. And James mentioned my book, Add Then Multiply. I am currently working on my 2nd book, which is going to be based all around this whole issue and theme and look specifically at what do we need to do at a micro level for the individual entrepreneur in order to successfully raise capital, but also at a macro level, what needs to change in society? What are the political changes? What are the economic changes? What are the societal changes that we need to see happening in order to reach a position where we have a level playing field? Because at the end of the day, we're all human beings, and the gross injustice that is currently out there is absurd. I'll just give you, I'll give you one more thing and then I'll check the questions and then we can have a dialogue. Just before our event at the London Stock Exchange, a report came out from Morningstar. And they had analyzed the fund managers of all of the listed open-ended investment funds in the UK. and looked at the names of the fund managers. And the most common name of a fund manager was David, which I thought was kind of cool. But as you read further into the report, it actually turns out that more funds are run by a man named David than are run by all women. And that's an indication of part of the problem. The fund management and investment industry is still very much pale male and stale. It's middle-aged white guys who went to Oxbridge. And there's very similar stats. I saw something in the US that looked at what universities did most of the VCs go to, and what universities did most of the successful unicorn entrepreneurs go to. And no surprises, Harvard, Stanford, MIT, Yale. Bingo, both of them. So they're investing in what they know. And so my objective is going to be, how do we break down these barriers? So that's kind of my spiel. I'm very happy to take open Q&A.
So thank you, David. I think I'm going to jump in with some questions to kick things off. And then if anyone else has got any questions that they want to chip in, I'll be keeping an eye on the chat, and we'll see what people have to say. But I want to pick up on those, firstly, on those two things you mentioned, that I know you're still working on your book, so you may not have all of the answers right now because you're still researching it, you're still working on the book. But there was two parts to that, to the upcoming book. What can kind of minority founders do, female and minority founders do, to navigate at a macro level? What do they need to do to the playing field is going to be uneven for some time, so something needs to be done. And you're obviously talking with a lot of founders who have managed to find a way through the issues. So I guess I want to start there, and then we'll move on to the macro level. But what can female and ethnic minority founders who are on this call do to increase their chances of success? What do they need to do?
Number one, persevere. Keep at it, keep with it, stay focused. Number two, and probably more important, have a team around you. So fundraising is hard work, and it's a full-time job on top of your day job running your business. Don't try and do it alone. Bring your core team of people in. So depending on what your business is, if you've got a CTO or a COO or a CFO, bring them into the discussion, bring them into the process, bring them into what's going on so that you can share that burden, because it is a huge additional workload. And additionally, obviously I come from a finance background, so I'll always plug the CFO role, but a good experienced CFO who has been through the fundraising process before will be immensely helpful to you. So if you haven't got someone who's got that experience, I would suggest that you do look for them, and you figure out how can we bring them on board. I do that work for some clients, but it's one of those things where I have a bandwidth issue. So I'm currently working on 2 fundraising projects. I can't take on any more in the short term because they're they're also very time consuming for me. But I am actually looking at potentially growing my team so that we can scale that up. But there are CFOs out there that you can find who will bring that level of experience. You don't necessarily need to take them on a full-time basis. You can hire them on a contract basis. So yeah, persevere, involve your team. And the third thing I would say is, there is a huge number of funds out there, a huge number of venture capital funds. Do your homework and find the funds that fit with what you are doing. So one of my clients that I'm doing a raise on right now, they're an ed tech business, female founded, ethnic minority, and they have EIS. So we've got a number of different criteria. And so I went out and did an initial search and came up with a list of nearly 400 investors that fit the kind of the criteria and the deal size. And then we just systematically went through and had a look on every single one of them and drew up like a heat map, and where were the ones where there was more than one crossover. And things like there are some big generalist EIS funds. I would suggest that if you're a female founder or a founder from an ethnic minority, I wouldn't go to the big generalist funds. But I know, for instance, that there are funds that back female founders. I know that there are funds that back Black founders. I know that there are funds that back Asian founders. So try and find the funds that are going to be amenable to you and your situation and your circumstances. And it's, you know, it's part of putting in the legwork. But rather than, you know, you could do what they used to call the old spray and pray, where you send your pitch deck out to hundreds and hundreds of people and hope that it lands somewhere where it's going to have some value. Or you could take the time and do the research up front and tailor your pitch deck to 10 or 15 or 20 investors who are much more likely to give you the kind of response that you want to be getting. So those would be my initial recommendations.
Yeah, there's a couple of sort of follow-up questions coming through, largely around the fund of the theme of, you're sort of talking about funds, but what about the pre-seed where you're looking for angels? Is that the same? I mean, I would say it's a very similar approach. You're targeting the angels that are more sympathetic.
It's a similar approach.
That they want to.
I mean,
founders, but
yeah, the angels are often a little bit harder to get to know because they operate in syndicates, and to get inside the syndicate, you need to find out who's the gatekeeper and get through them. But you can do research and you can find stuff out about how to access them and who they are and where to go. For the smaller ones where you're focused on angels, yeah, it's going to be more a case of who do you know who knows an angel? Do you know anyone who could introduce you and connect you? It's unfortunate, but warm introductions are still beneficial in the industry.
Yeah, I mean, the research I did for my book was exactly the same. Warm introductions, hands down, is the best way to get to an angel. So it is exploring your network, building your network.
I was talking to someone this morning who is a director at PwC Raise, which is a division of PwC that's focused on supporting private sector businesses raising funds. And she was saying they had done research on the different routes, and you were 2.4 times more likely to get a meeting with an investor if it came off the back of a warm introduction.
Yeah. So some of the,
but that's where LinkedIn comes in, because if you can find out who the investor is and if you're a second degree to get a connection to them, well, then go through the list of the common connections and find someone who you're connected with who might be able to introduce you to them.
I mean, I saw, so someone's asked it like any hacks, pre-seed entrepreneurs, no team, CFO bound, any hacks? Well, talking about these introductions and finding the investors through your network, I saw probably, what I talk about when I talk about kind of your campaign strategy, I saw someone execute it perfectly on LinkedIn the other week. And he, so this doesn't matter, what your background is as a founder. Every founder should be doing this, looking for pre-seed funding. But he just put out his a kind of a shortened version, a 10-slide teaser deck onto LinkedIn, asking for people's feedback. I'm about to launch my funding campaign. Can you give me feedback on my pitch? Now, he knew his pitch was pretty down spot on. He didn't really need feedback. It was a great pitch. But what happened is you had a load of people who he's, obviously he's building a business in a sector that he's got vast experience and connections in. So in the thread, you had loads of people validating his vision, because you had all of his ex-colleagues going, we absolutely need this in the industry. And in the same thread, you had people in his network who don't list themselves as angel investors, but have invested in businesses, going, contact me. I invest in businesses, but they're the CFO of somewhere or the marketing director somewhere else. They don't list themselves as angels. And he had 4 or 5 angel investors in his network, and he didn't even know it. And his concept's being validated in the eyes, right in front of their eyes on a live feed. So it couldn't have gone any better. And they're going to be able to then introduce him to their angel networks and their colleagues. They've invested in businesses that have 4 or 5 other investors, and then it snowballs from there. So it's just doing little things like that to just tell people you're raising money. you think you're not connected to investors, you probably are. You just don't realize. And just little things like that, just putting yourself out there. Don't come away from the hiding behind the computer screen, if you like, and just sort of push yourself out there can make a huge difference.
I mean, I'm just looking at the couple of, so how do you get the team? So how do you get the team? I had a team just sitting on a debt waiting for investment now to get their equity and monthly salary, now back at doing it on my own. That's a tough one. The team, especially in the early days, is critical. I always recommend to founders that if they've got key people in their core team, in their early stage team, offer them the opportunity to buy into the company. You know, it doesn't have to be a huge stake, but if you've got a key person who's critical to the thing, offer them the opportunity to buy in and take 5% of the company.
And I would,
that will them.
So that if that team is just sitting there on your deck waiting for their equity and salary, they don't sound like a particularly bought in visionary team that are excited about what you want to do and want to support you in the journey. They look like opportunists. You want people who you turn around to them and say, look, let's do equity now. Let's bring you in an advisory capacity just in return for 5% equity between you. Let's get this funding together. Help me out. In an advisory capacity. As soon as we get the funding, we can then bring you in full time in the COO, the CFO positions, and then we can build this together. And if they're like, no, I don't want to do that, that sounds like a lot of effort, they're not the people you want on your founding team. Your founding team need to be as passionate about this as you and be willing to take the risks just like you. So, I would say that if that's the case, they're just sitting on your deck, they're probably not the right founding team for you to start hiring or raise the capital.
And have them buy in. Don't give them equity. Have them buy. You don't need. You can issue shares at the nominal value. So when you're first starting out, your company might have £100 in equity, and so you issue them another, and you've got all of it. You issue them another 5 shares, but have them put the $5 into the bank, because it's a symbolic thing, but it's them parting with money, as opposed to them thinking, oh well, here it's a free ride. I'm going to get given equity. As James well knows, and as anyone who reads my book will know, giving away equity is an expression that really bugs me, because equity should never be given away. As a founder of a business, equity is the most valuable thing you have. By all means, exchange it for something of equal or greater value, but never give it away.
Absolutely. So moving on to
so what have you done? Sorry, James, do you want to go ahead?
Yeah. So just wanted to move on to the macro level. So I know you're still researching this. You're still, it's a massive topic. It's political. It's sociological. It's economic. It's a massive topic to wrestle with. But at the moment, what are you seeing? What's the macro picture? What needs to be done, or should VCs or whoever be doing to try and rectify this?
Yeah. So at the UK level, there's quite a lot going on. The British Business Bank is still very active with what it's doing with the UK VC and female founders. The London Stock, again, this is big macro. The London Stock Exchange is still very active in promoting female members of boards. There was an article that came out in, I think it was March, that for only the second time ever, there are no FTSE 350 companies that are all male boards. And it happened once, I think 5 or 6 years ago, and only lasted for 2 or 3 months. But so there's a lot of top level things going on. There is a code that was published by the UK Treasury called the Investing in Women Code. And that came out in 2020 and is being promoted. This is an annual progress report update on it. The other big one for female founders was the Alison Rose report. So Alison Rose is the chief executive of NatWest Bank, and she did a quite extensive research report. And one of the findings that came out of that was that if female founded businesses were invested into the same level as male-founded businesses, it would release an extra £200 billion into the UK economy.
Wow.
Which is just staggering. And you know, I've been talking with one of my mentors, and her view is that's the angle that you need to take when you're talking to the venture capital industry. You guys are leaving a ton of money on the table. So I'm working on how to craft that exactly.
It's a real shame that that's the only way to get through to them, isn't it? It's an indictment on on the industry.
I think there's a lot of issues in the industry, and you know, it's a very closed industry. It's extremely hard to break into. Also in terms of, you know, if you want to work in the venture capital industry, it's very hard to get into. There are one or two routes, but it's very difficult. There are still, and I don't have the stats to hand, they're in the British Business Bank report, but it's still something like less than 10% of members of investment committees are women. And it's an even lower statistic for racial minorities. One of the other really interesting macro level reports that came out last month is called the Cornerstone Report, Access to Venture Capital. And that's looking at things from a racial perspective, as opposed to from a gender perspective. And one of the findings that they had was that they looked at the London cohort. So they looked at deals all over the UK, but they looked at the London cohort, and I think it was 3.5% of the deals that were funded in London went to Black founders, and yet I think 13% of London's population is Black, and just under 10% went to Asian founders, and around 25% of London's population is Asian. So there is still a stark unfair allocation of funding based on race, even in London, which is one of the most multicultural cities on the planet. So you know, at that macro level, what else needs to be done? On the political side of things, so I connected with a lady who runs the secretariat for the all-party parliamentary group on inclusive entrepreneurship, and I am now one of the lay members on that committee. So I can't say that I'm on the committee because I'm not a parliamentarian, but I'm one of the lay members that's in the group that's doing the research to support what's going to go to the parliamentarians for them to discuss and debate and bring to the House. So I'm involved on that side. I've set myself, as James knows, I've set myself the big, hairy, audacious goal of speaking about this subject at the United Nations. And I've been madly networking into the United Nations to try and find people who might be appropriate. I actually managed to connect with one woman who runs an event, but it was not at all relevant to what I was doing. And I asked her, well, who should I talk to? And she said, the UN is a huge organization. I only know my director and I have no idea who anyone else is. So I'm still working on that. I've got a couple of people in the Director General's office that I'm trying to liaise with and find out and get, because I think this is something that needs to be raised to governments at the highest level. As I said, you know, just off the back of 3 events that I've run, I've now, and you know, I've probably spent a few grand on marketing these things. So it's all been very organic. But I've now got a database of more than 500 people in 25 countries on 5 continents who are saying, hey, this is unfair. And I know there are many, many more people that we can reach. And as we reach those people and gather a stronger collective voice, that's how we will raise this to the level of political and social change.
I think the sorts of things that you're doing that kind of highlights it, the promotion, the PR, that the industry as a whole, to put on events like this and events like you're doing, and bringing female founders, female investors to the fore is kind of part of it. I mean, presumably, you know, if you look at Whitney Wolfe and what she achieved, has recently achieved at Bumble, and being is it the youngest female billionaire, something like that, or to exit for $1 billion. Presumably, we're seeing opinions and start to change when successes like that are seen.
Yes, you definitely are, and you know, one of the most popular photos that came out on social media just after they did their IPO was actually a photograph of Whitney Wolfe Herd checking into the building, laying her ID down on the thingy to get through the access control door, and slung across her shoulder in a sling, she had her little baby. And there she is, the CEO, you know, the billionaire CEO going to work with her baby, and that photograph really took off. There's another great one that just came out this week, of the chief executive of an e-commerce clothing company based in Toronto, and she has just closed a $53 million round. She's 8 months pregnant with twins, and she made very clear on the fundraising round that if anybody made any comments around the fact that how was she going to carry on working with twins, they were out of the round. So, you know, sometimes it takes some people taking a strong, aggressive position, you know, kind of push back with equal or greater force. Sometimes you need those kinds of things. And sometimes you need to just, so what I'm doing is kind of trying to gather a groundswell of people. And then with that groundswell, you know, I mean, I'm already reaching out to connections. I have a number of second degree connections to her. I've reached out to them to say, could you introduce me to this CEO? Because I'd love to have her come and speak and share her wisdom and what she learned from this. Because, you know, I think there's one of the things I've discovered in doing this is there are so many people who are willing to share what they've learned. They're willing to share and help others. And, you know, that's just been such an uplifting thing to experience. And so that's why I'm, you know, pulling people together, and you know, that's why James invited me to speak to this community.
I guess on a something that just sprung to mind, and I have no idea how viable this is, but you're talking about political change, and I was just thinking about the way the EIS and SCIS schemes, especially the SCIS, has made London kind of the place to invest in Europe. It's more money is invested in London than any other part, than the top 5 cities in Europe combined. Yeah, it's insane. And then you've got 5 other UK cities in the top 20 across Europe. I mean, it's made, that scheme has made us the epicenter for Europe and on par with,
absolutely,
you know, Silicon Valley in the States, you know. So I just suddenly thought, like, what if, you know, big what if, but what if a scheme like that was available for investing in female and ethnic minority founders? You made that financially more rewarding for, is that the right thing? Is that the wrong thing? I have no idea.
Wow. I mean, I'm not a politician.
What do people am I completely off the point here? Put your thoughts of that idea in the chat. Let's get
it'd be an interesting one to see what people think. My fear, particularly with our current government that seems to want to please everybody and as a result isn't pleasing anybody, but I fear that at a political level, something like that could be quite strongly challenged. Not that, you know, not saying it's right or it's wrong, but I could see something like that being challenged. But yeah, I don't know. I'm not a politician. I have no interest in becoming a politician.
No. G. Bowman makes a good point. The idea of being tagged. Yeah. See,
don't like the idea of being tagged. Yeah.
Yeah, it's a good point. I mean, it's a massive issue, and it's I don't know if anyone's got any of the answers, but that's why events like these are important, because we need to discuss the events, and that leads me on actually to one of my final questions, and that's, you know, you're clearly a white male, right? So why is it taking a white male to stand up and what's
Wow.
why is this happening?
Yeah. That's a really good question. I know that one of the pieces of feedback that I get from people when I'm talking to is that being a white male leading this challenge gives it a stronger voice, because I'm, and I don't want this to come across in the wrong way, but I'm not one of the downtrodden trying to step up. I mean, I'm in that group that could raise money, but I'm looking at all of these other people and who aren't able to raise money and saying, hey, this isn't fair. This is wrong. And I guess at a bigger, more human level, it's almost like events in my life have transpired that have put me here today. I mean, I talk in my TEDx about when I was a little boy, and I was 7 years old, and I told my mom I liked chocolate chip cookies. So she taught me how to bake chocolate chip cookies. By the time I was 12, I was cooking dinner for our family at least once a week. And when I was 15 and I had my first girlfriend, and I said to my mom that I thought I looked smarter wearing shirts that had been ironed, her response was, great, I'll teach you how to iron shirts. So I grew up, and bear in mind, this was the 70s. I grew up in an environment of where, you know, I was the youngest of 4 kids. I've got a brother and 2 sisters, but I grew up in an environment where gender didn't matter. You know, if you wanted to do stuff, you pitched in and did it. And you know, I'm thankful to my mom for that. And then, you know, I went and did my accountancy training. I ended up working for those 3 companies for 10 years and learning about fundraising and all of that. It's not like I had a master plan, but all of a sudden I found myself, after that woman came up to me and asked me that question, why so little funding goes to female entrepreneurs. It's just like all of these events in my life have come together, and it's almost like the dots have joined, and it's, this is what I'm supposed to do.
Yeah.
So that's kind of my internal view on that. Why is it taking a white man to do that? I wish I had the answer to that question. I'm not Oxbridge educated. I'm a colonial. So, you know, you could almost argue I've got those strikes against me. But I think I saw an opportunity to try and do something and to right a wrong that I see in the world, in my own corner of the world, and that's a fight that I'm willing to take on. Yeah, I don't know why. You know,
No,
it's a really good question.
Yeah, and I think you know, if we're going to see change, it has to be attacked from all angles, right? So if you wanted to call it what did you say, white, stale, and male, or something? Pale, stale, and male.
Pale, stale, and male.
So sometimes, not that I'm saying you're pale and stale, David, but maybe it takes a pale, stale male to talk to other pale, stale males about this, and for them to actually take notice and bring it to their attention, so then they can look at what's going on, because they may not be part of these networks. They may not be part of these other amazing groups that are out there trying with the same fight, and we're attacking it from all angles, I suppose, is going to.
And you know, coming back to that point, that you know, the industry is very closed. It's quite elitist. You know, if you've been working in venture capital or private equity for a while, you've done very, very well. Thank you very much. Why would you want to change? I think that's a big element of it. And you know, again, one of the things that came out of, I can't remember, I read so many reports about it, but one of the things that came out of one of the reports was that women and racial minorities just don't have access to the same networks and the same sources of capital. And we need to figure out how to address that.
Yeah, I think Jane and Clarissa make a good point, and it's going to take time, isn't it? And the more the more that
Sorry, I just pulled up, excuse me.
female and ethnic minority founders succeed, the more they're going to be on the other side of the table investing in the next. You know, Whitney Wolf will be looking to spend some of her $1 billion, no doubt, investing in other female founders.
Absolutely.
And I guess that's, you know, that it's human instinct to just feel more connected with someone who's like them. I can imagine these 60, 70-year-old investors kind of seeing a pitch from a young male going, he reminds me of when I was young. And
exactly.
even if they try and block that out, that's in the back of their mind. So the more diverse representation we have at the investing side of things, the more things are going to hopefully become equal. And it's going to take time, because it's going to take some entrepreneurs to become billionaires and millionaires to have the capital to start investing into those businesses and start infiltrating that stale and male. And they're you know, the stale and male are pretty old now, so you know, they'll soon be gone. They're going to be replaced with a younger generation with a different mindset, and I guess
exactly. And you know, the millennial, the Gen Zs and the millennials, I mean, they have a different outlook on so much in life. So it's, you know, it is going to evolve, but it's still a challenge. I'd love, I know we're running short on time. I'd love to share with you one graphic. Just bear with me 1 second. So this was a report that came out from Beauhurst, which is a UK research agency. Hopefully you can see this chart.
Yes.
So this is looking at all of the deals by the gender of the founding team, and you can see that the male curve is just growing on a steady upward trajectory. The mixed gender team, to a much lesser degree, but is growing, but the all-female team is still well down. That's just the number of deals. What's even more shocking is the amount of money raised. Look in the last year how much money has gone to all male teams, and look what's gone to mixed gender teams. Now you have to bear in mind, in this there were 2 mega deals. One was Starling Bank, led by Anne Bowden, and the other one was an R&D research company called PatSnap. I don't know them, but between the 2 of them, they raised £500 million. But apart from that, you know, look at the funding that's going to the all-female teams. It's just trickling along the bottom. You've got a little spike up here, and it's back down. And one of the things that I've seen and read about in numerous places, and it came out even again this week in an article in Management Today, is that it appears that female founders are not asking for as much money. So they tend to be much more conservative. In their minds, they're positioning it as a much more realistic. Whereas male founders are often, oh no, we're gonna become a unicorn in the next 6 months, kind of thing. And I think part of that challenge is going to be convincing the female founders to be a bit more aggressive with their ask and with their projections. And it's, you know, it's going to be striking the right balance, but don't be conservative.
I think, yeah, that was really interesting, because that actually, if you think, I mean, deals are still very small, but they are slowly growing in from the look of that graph. But the amount of money invested seemed fairly static. So more deals are happening, but presumably at a lesser amount, because the same amount of money is being split across more female founders. So something strange is going on.
And the all-female graph just skates along the bottom. So they're making, it hasn't grown.
Yeah, slightly more deals, but the actual amount of money is being shared across more people. So raising less, which is a worrying and interesting trend. But I mean, we've been focusing on kind of what needs to be done. I think the way to end this would probably just be to talk about the UK in regard to the rest of the world. And my understanding is that while we are way off where we need to be, we are in fact making the most progress in this area versus places like the States.
Yes, yes, and it's interesting. There was a report. There was a report that came out in October of last year that looked at all female deals funded in the USA versus Europe. And in the USA, in the third quarter of last year, the number dropped quarter on quarter, and it dropped so sharply that it was back down to the level of funding in 2017. Whereas in Europe, and in particular in the UK, because the UK, as we've said, leads Europe by such a huge factor, in Europe, the value of the funding was continuing to grow. What's been really interesting is that PitchBook hasn't released any data on Q4 and Q1. And I'm quite surprised by that, because they must have it. And I don't know if it's showing a continuing downward trend or what. I haven't looked for it recently, but when I was doing some research on that section of my book at the beginning of April, I went in and particularly wanted to see if I could find the Q1 stats, and there was nothing. And then I went back and the Q4 stats, there was nothing. So I don't know what's going on, but the backing for female founders in the US is falling. The backing for female founders in Europe is growing. One of the other interesting recent developments, again, this was a US piece, but I picked up on it. It was an article in Forbes. For the first time ever, white men don't own the majority of businesses in the United States. They're still the largest at 41%, but it's really interesting. So it's 40. Hang on, let me just pull up my LinkedIn, because I've got the exact stats in a post that I booked up yesterday.
It was like, yeah, I saw that post. It was
41% of businesses are owned by white men. 25% are owned by white women. And then in America, they use the expression of color. So men of color, 21%, women of color, 13%. But, so that means that it's a 2/3, 1/3 split between white, non-white. And it's a 60-40 split between men and women. So it's definitely moving in the right direction. But there's more to be done.
Always more to be done. So we should be ending now, but if you got 5 more minutes, because Emma asks a really great question, and you kind of dropped a little golden nugget there, and Emma's following up is why is it good to be aggressive with your projections? Surely this is just going to disappoint investors later down the line. So if you have to be aggressive and then go back to those same investors, you have to explain why those projections haven't been hit. So what's the logic behind that?
Yeah, so I'm not necessarily saying be aggressive. I'm saying don't be conservative. Maybe there's a nuance of terminology there, but you've got to, if you put yourself in the shoes of a VC, and understanding the way that the VC industry works, particularly on the VCs that are investing in early stage businesses, they know that out of 10 investments, 2 of them are going to fail. They're going to completely go bust. 6 or 7 of them are going to kind of trundle along, and they might be lucky to get their money back. They might not sure, but it's kind of a pain. And 1 or 2 of them are absolutely going to take off. And those 1 or 2 that are going to take off are the ones that are in effect return the fund and the profits back to their investors. Yeah. And so therefore, a VC is always going to be looking for which are the potential businesses that could well do that moonshot. And if they're coming into a business and let's say the return over a 5-year period is 2 to 1 or 3 to 1 or something like that, unfortunately, even though it could well be an amazing business, the way the model works, that's not going to be attractive enough, because they're looking at it on the basis of, well, if this is 1 in 10, and even if they hit their projections that they're giving me, I'm only going to get a 3x return. That's not enough. Yeah.
So it's actually called the VC power curve. They've coined that phrase. It gets used a lot. It's the VC power curve, and it is like, say you've got a fund, you're investing in 20 businesses, you expect about 95% of them to fail, 2 or 3 to break even, one to get you maybe a 5x return, and then one to get you a 100x return. And it's that one business that then pays off all the losses and delivers the 3x for their investors. So you've got to remember that VCs have investors who, say you've got a £100 million fund, they want 300 million back at the end of the day. So you've got to, they're trying to play the numbers. So while for you it might seem surely we're going to disappoint them, they're expecting to be disappointed 95 times out of 100. So every investment they make 20 investments. They only expect one of you to hit those projections. But what they want to see is the potential for the market is there, that you have a strategy there to deliver a potential of 100x return. You have the confidence and the ability to deliver 100x return, 100 million plus revenue in 5 years. And you want to show that you have the confidence and the belief to be able to do that. If you end up only hitting your year 2 financial projections are over 5 years and you break even, or you give them a 2 or 5x return, then there's nothing lost. But they are looking for you to have the confidence and the belief that you could deliver that massive return. They are the unicorn hunters. So if you go in there with that conservative kind of, well, this is what we realistically think is going to happen, you just won't stack up against what they're looking for to deliver a return on their fund. So I think that's what David means when he says be aggressive or not be conservative, is because it's getting in the psyche of the investor and what they're looking for. And they're looking for that
I mean,
return.
Just to pick up on the other half of Emma's question, which is if you're aggressive and then go back and you haven't made your numbers, that will be a difficult conversation. But I understand how it can appear to be slightly perverse, but the reality is, at this stage of the game, you're looking for that first round of funding. You can't be too conservative, because you just won't get it. You won't attract the investors. You need to have that stretch. And if you don't believe in that stretch, then you're probably not right going out to venture capital funders. You might need to look at other things, whether it's friend and family or crowdfunding or.
But I say it's kind of get the funding, because otherwise you'll never hit those targets, and cross that bridge when it comes to it, and look at what your options are when it gets to that point. But to be competitive in the market, you're going to need to show that potential return. So and be aggressive on valuation too. So aggressive on your potential exit valuation, like do your research, see what you could potentially get and offer, and make sure your financials, your profit when kind of multiplied by the exit multiple, the EBITDA multiple is going to, in those 5 years is going to deliver that handsome return. So your exit valuation, certainly. Obviously, when it comes to your valuation that you're offering the investors now to invest in, you want that to be as fair as possible. They're looking for a great deal at the end of the day. So you don't want to undervalue yourself. You don't want to overvalue yourself, because they'll choose someone else who gives them a better deal. So it's offering trying to offer a fair valuation, I would say. So get the evaluation right now as being, aggressive projections, aggressive future exit potential. Have the research to back up that it's possible and the market's big enough to achieve those numbers. But when you're looking at today, you then become very fair, and you kind of say, look, this is where we're at, and this is a fair deal based on other deals we've seen in the market right now. This is a fair valuation, and you're much more likely to then have meaningful conversations with them. Would you add anything, David?
They're used to seeing hockey sticks.
Play them at their own game is essentially what we're saying.
Exactly.
Play them at their own game.
Yeah.
Awesome. Well, on that note, I think we're gonna bring this to an end. So thank you to David for sharing his insights and his story, and please do follow David on LinkedIn, join his Facebook groups and Funding Focus. Have a look for what he's doing at Funding Focus, and join the discussion, get involved, and let's make a difference all together, and support each other through this, and try and make things as fair as we possibly can in our lifetimes anyway. So thank you for today.
I did put my LinkedIn in the chat, but just in case anybody's not wanting to go hunting for it, I'll just stick it in again.
There it is. So there's David's LinkedIn, David B Horne on LinkedIn. And yeah, we'll see you all at an event again soon. So thanks for joining me, and thank you again, David, and we'll speak very soon. All the best.
Thank you, everybody. Bye-bye.